Welcome to Talk Tickers. Today, we're digging into PNC's fourth quarter 2025 earnings report, and wow, it was a big one. Management sounded super confident, the stock reacted really well, and we're going to break down exactly what has investors so excited.
Okay, let's just jump right to the headline number. PNC delivered diluted earnings per share of $4.88. Now, to be clear, that's not just a beat, that is a massive 16% beat over what Wall Street was expecting. A number like this, it definitely makes people sit up and pay attention.
So here's our game plan for today. First, we'll talk more about that huge earnings beat. Then, we're going to peek under the hood and see what parts of the business are really firing. After that, we have to talk about the huge First Bank acquisition. It's a real game changer. Then, we'll look at the company's guidance before we wrap it all up with our own rating and what we're watching for next quarter.
All right, let's start with that top-level performance. This wasn't just a good quarter for PNC, it was one of those rare quarters where pretty much everything went right. The story here is just comprehensive strength. That 16% earnings beat didn't just come from cutting a bunch of costs. No, it was powered by a really solid 2% beat on revenue, which came in over $6 billion. And that's the combo you always want to see. Real, genuine business momentum driving that outperformance on the bottom line.
So how did they do it? Well, this quarter really shows off what you could call a two-engine growth story for PNC. Both their core banking business and their fee-based businesses were looking incredibly strong.
Think about it like this. Their main engine, net interest income from basic banking, was just humming along beautifully, up 2% thanks to more loans and better funding costs. But the real surprise, that was the second engine, fee income, which just kicked into overdrive and gave a huge boost to the whole operation.
I mean, just look at this, an explosion in capital markets and advisory services, up 13% in a single quarter. It seems like with the economy getting a little more predictable, that M&A logjam we've seen finally broke, and PNC was right there, perfectly positioned to cash in. That, plus some nice steady growth in asset management, really shows you how diversified their businesses become.
All right, let's move on to the next big piece of the puzzle, and this one is huge. We're talking about the strategic acquisition of First Bank, which actually closed right after the quarter ended.
The CEO was pretty blunt about it on the earnings call. He said, if you're not growing, you're shrinking, and this deal is their answer to that reality. This isn't just about getting bigger for the sake of it. No, this is a strategic push into some really high-growth markets to turn PNC from a regional heavyweight into a true national player.
And management gave investors a really clear roadmap, which is great to see. The deal is officially done. The heavy lifting on the integration is going to happen around the middle of the year, and by the end of 2026, First Bank should be a totally seamless part of the PNC machine. This gives the market a clear story to follow quarter by quarter. So what's the payoff? I mean, that's the crucial question, right? Well, management put a hard number on it. They expect this deal to add about $1 per share to earnings in 2027. That makes the whole strategy really tangible and gives investors a clear way to measure its success.
Okay, so this brings us to the outlook. After a quarter this strong, management came out and set a really high bar for 2026. They're signaling a whole lot of confidence in the year ahead.
And their guidance shows you just how confident they are. They're calling for 8% loan growth, 11% revenue growth, and a massive 14% jump in net interest income. And get this, they plan on doing all of that while keeping expense growth down to just 7%. That's impressive. So what's the takeaway from all that guidance? Well, it all boils down to about 400 basis points of positive operating leverage. That's the magic formula in banking, where your revenues are growing way faster than your costs. It's a direct path to bigger margins and higher profits. Exactly what you want to see.
And to top it all off, they're putting their money where their mouth is. Management announced they're planning to buy back between $600 and $700 million worth of their own stock just in the first quarter. That is a powerful signal that they believe their stock is undervalued.
Okay, so let's recap. We've seen a massive beat, we've seen strong underlying business drivers, there's a clear strategic catalyst with the new acquisition, and the guidance is incredibly bullish. So let's try to put all of that together into an actionable idea.
So, as we head into the next earnings report, what's the trade here? How should you be thinking about this stock?
All right, this is the next call. For the first quarter of 2026, we are predicting that the results will meet or maybe even beat the high end of their own guidance. We'll be watching for revenue growth to hit that 3% target, fueled by continued momentum in their core banking business. And frankly, we think capital markets could deliver another upside surprise. Our call?
The stock tests its 52-week highs after they report.
Based on this really strong fundamental picture and what looks like clear execution, our rating on PNC is outperform.
So, the trade idea is to go long PNC stock. We're setting a price target of $240, which is right in line with the Wall Street consensus. The two things you absolutely have to watch are, 1, a smooth integration of First Bank, and 2, that they keep delivering that positive operating leverage. If they nail both of those, we see some significant upside from here.
So that's our breakdown of PNC's fantastic quarter. Thanks for tuning into this analysis. And just a quick reminder, this content is for informational purposes only and should not be considered financial advice.